interesting. 100 points on the Nifty straight off the bat. 300 on the Sensex nearly is what you have. So this is a strong start after a very strong close yesterday. Overnight, Nasdaq up 1%, S&P at a new high. And of course, I mean, you know, the bounce that we saw yesterday as well. The market defending 20-day, and there is a bit of a leg up. This is coming in right now. Lots of stuff moving around. Market breadth is very positive, and I think you've got the Nifty Bank, which is up 300 points straight off the bat, about 0.7% higher on the Nifty Bank. But Sonia has walked across to the wall with more rates. Sonia.
Well, thanks a lot for that. As you said, it's a really good start for the market. Just look at that. The Nifty is now up about 130 odd points. Up 0.6%, holding on very well to that 22,100 mark. You have the Nifty Bank that is up almost 370 points, so pretty strong over there. It's a 1% rally on the Nifty Bank. Now let's look at the auto stocks, because we've had two numbers that have come in. Bajaj Auto's numbers were not bad at all. In fact, the exports have also grown 10%. Overall numbers are up 24%. Bajaj Auto is the big mover right now, 1.5% higher. The street likes those numbers. On the flip side, actually, it's Escorts that is a bit worrying because the numbers are down. And not only that, you have the management commentary, which is on the weaker side. So Escorts not doing that well. The rest of the auto companies will definitely be in focus ahead of their numbers today. So Maruti is up about 1%. M&M is the other one I'm watching. Passenger vehicles in general is expected to be quite good. And then you have something like TVS Motor, which has been outperforming the sector for a while. Let's move across now to CG Power and Tube Investments, which is the big story of the morning. Of course, CG Power in pre-opening was up about 8%. There you have it. The cabinet approving establishment of 3 semiconductor units has definitely gone down well with the street. Of course, it's a long gestation period project, so it will take 3 years for the plants to come on stream. Tube Investments is also up almost about 3%. Let's move on to Hindalco. Very interesting report from CLSA where they have upgraded Hindalco to a buy. They have a target price of 635 on Hindalco. They say following a sharp correction, they believe the concern is overdone. So Hindalco is seeing some amount of buying action. On the downside, Suven Pharma, the US FDA has issued 7 observations for one of its facilities, so down 0.3%. Nomura has a reduce on Gujarat Gas with a target price of 505, so just keep an eye out on that stock. And then you have CMS Info Systems in some of the smaller companies, where the CEO of CMS Info has raised his stake in the company, and hence the street likes that, up about 2%. And I'm also just, take a quick check on the hospital companies. Yesterday, Apollo Hospitals was under quite a bit of pressure. This morning, Jefferies has put out a note where they say that the fall is overdone and it's a good time to buy, but the street doesn't feel that way. Apollo Hospitals down an additional 2.5%. Fortis Health, look at Max Health, 6.5% knockdown there. So clearly the street is very concerned about this space. But overall, it has to be said that this is a fabulous opening. I think the market is reacting to that very strong GDP number as well. It's gotten some additional wings. Back to you.
All right, thanks for that, Sonia. Well, a few more stocks that I'm looking at. Landmark Cars, that one has received a letter of intent from MG Motor India for opening a dealership in Madhya Pradesh in Ujjain, I think. So that one, in fact, is up close to around 8%. Big move is what we're seeing on that one. Zomato is flying away. That's up close to around 4% as we speak. So good up move is what we're seeing out there. Hudco as well up close to around 2%. These are some of the top volume movers in trade today. Vedanta, they didn't get a green signal to open the Tuticorin smelter. Not priced in terms of an SOW, but that's a sentiment negative that we're seeing. So that's why that stock is down close to around 1% or thereabouts. You have Craftsman Automation as well. They had informed the exchanges yesterday that they have started commercial operations at one of their new units. So that explains why that stock as well is doing pretty well. And some of these metal-related plays are bouncing back. So SAIL, it saw a sharp correction, I think, from around 145 odd to around 120 rupees. Now that stock has bounced up close to around 4% in today's trading session. Tata Steel as well holding with a gain of close to around 2%. So good opening. The Nifty Bank, by the way, is on the verge of moving towards that 46,600 odd mark. That's the 50 DMA. Let's see if it can get past that mark.
Absolutely. And, Borosil Renewables, just a few other names, right? So it's a strong start, no doubt. 140 higher is what you have. Paytm is up about 4%. So 420. I mean, I think last 2 days, I think yesterday it did bounce from the day's low, but so back at about 420 right now. Borosil Renewables is up about 7.5%, so it's looking good. Adani Green will come up on your screen. Adani Green is up about 3.5%. There is, Suven Pharma, I think we mentioned 9% higher now, 686. I think we did mention SAIL and CG Power, both are looking good. Medanta is up about 4% or so. So that's a hospital company which is up, unlike some of the others, I think like Max, etc., which I think are lower. Landmark is up about 6%. Keynes is up 4%. There is Anantraj, which is up about 3.5%, a small name really. So yeah, it's a vibrant screen, and lots of stuff moving around, and market breadth is very firm. 6:1 is the advanced decline ratio straight out of the gates this morning. The one large volume-led loser is Max, which is coming off very sharply, 741. And if you think about it, I think the recent high, I think 2 or 3 weeks back was about 900 plus. So that's taken a knock. Berger Paints, I was sort of talking about this, with Mitesh earlier. Berger is the third largest volume-led loser. It surged about 7% yesterday on the back of course, competitive intensity in the paint space, etc. Kalyan Jewelers is down about 2%. You've got GPT Health, which is down about 3%, 194. Coming up with volumes, by the way. And you've got something like a Jyoti Laboratories, which is down about 4% or so as well. So that is the sort of broader picture, lay of the land, as we are starting this morning with the open. Well, we have Andrew Holland, Chief Executive Officer, Aventus Alternate Strategies, with us. Andrew, good to have you with us here. Thank you very much for your time. It's looking reflationary, isn't it? There are these intermittent bursts of doubts which come, but it's basically back to 2021 kind of mood. Dollar is up, equities are up, and cryptos are booming. I think Bitcoin is up 40% this year so far. Your thoughts briefly to begin the discussion before we get into individual sort of themes and sectors that you're betting on.
Yeah, no, it's well, we're being dragged up by global markets, aren't we? I mean, I think our market was up 1% and a bit last month, but if you look across the rest of the world, markets are up anywhere between 4 to 10%, with China being up 10%. So, whilst we had that kind of love India, don't love China, the markets are performing ours at the moment. So, that goes to tell you what the markets are doing. Just globally, it's really kind of any news is just seen as good news, so it doesn't really matter at this point. I think the market today is probably going to reflect a few things. One, I know those blockbuster GDP figures look great, but scratch below that, and you actually see that consumption slowing down. So I think the market's probably going to pick up on this and think about whether the RBI can go ahead of the Fed in terms of reducing rates. It's an interesting question. They can do it if they want to. And maybe that's why you're going to, kind of the interest rate sensitive, maybe the banks moving a little bit higher on the back of that kind of thinking.
Okay, well, by the way, it's record highs for Zomato. What a dream run it's been for this stock. 172 now. Who would have thought, right? It's up 4% today, and it's had a fabulous run this year. I mean, this month it's up 25% or 23% already. A big move coming in there. By the way, Andrew, hi, good morning. I wanted to talk a little bit about auto stocks as well, because decent numbers coming in from some of the two-wheeler names. And the big improvement is seen in exports, right? So for Bajaj Auto, while overall numbers, domestic numbers are up 25%, it's exports that have gone up 10% as well. Do you think there's more to go in this rally?
Yeah, it's been, the overall kind of auto sector has been, kind of a bit of a laggard of recent weeks because of, slowing consumption, obviously competitive, kind of negatives around EV and so forth and so on. So I think it's probably going to be one of those rotational moves into autos away from some of the other sectors which have done well. And I think, probably, we saw a few months ago IT doing well. I think the headwinds are still there for the sector. So everyone's just moving around as the market kind of consolidates around this 22,000 level. But obviously there's gains within sectorial kind of switches rather than fundamental changes in the sector in the very short term.
Hi, Andrew. Morning. Nigel on this side. The Nifty, the headline index, is making fresh all-time highs, but the Nifty Bank actually is still 3.5–4% away from its fresh all-time highs. I think you were sounding a little bit cautious on the banking space. What's your current view on the banking space here in India, and what's the preference out there?
So, Nigel, it's all about interest rates. You'll see more and more reports, about the banking sector with NIMs under pressure, deposit growth under pressure, everyone racing to the bottom to try and get deposits. And that's not going away until, you start to see interest rates fall. But what the budget did, what the government's, what the RBI is doing, I think all points to lower, bond yields. So that gives the RBI the scope to kind of reduce rates. And I said before, if you scrape below that headline figure of GDP, you've got a slowing economy. And that's the catalyst, I think. If the narrative changes that interest rates are coming down or bond yields are going to fall below 7, the banks will do well. So if you believe that's what could move that 3.5% higher for the banking sector in the very short term.
Okay, that's on the banking sector, and we also spoke about the auto sector. The other space that everyone's been talking about is the PSU space, right? Not just banks, but some of these other verticals as well, like defense, etc. So I wanted your thoughts on how to approach that entire space now. Do you see more legs there, or do you think the run is done?
Yeah, I'm a little bit more skeptical on the kind of overall broad brush approach of governance in all PSUs has changed completely. I'm not on that camp, but one of the camp I am in is that if you take the defence sector, which you mentioned, Sonia, it's a long runway that we're on here. The government spending will continue to be increased very, very significantly. So therefore, PSUs within that defence sector are one of the few ones that you can buy anyway. So, if you believe in the long-term future, then these are the companies you would have to buy. So I'm not concerned on that, but I'm not playing into this governance has changed and therefore we should give higher ratings.
Okay. But all right. That's interesting you say it. By the way, hospitals, Andrew, do you have a view? You must have seen the news flow around it, right? The Supreme Court directing the centre to actually standardize rates for medical procedures. And this has kind of raised the risk that they will be, it'll be regulated. For private hospitals, for example, we spoke with Narayana Hrudayalaya, who, quote unquote, not my words, his words, he said if this goes through, this is like an Armageddon event. But your thoughts, Andrew?
Well, Armageddon is probably summing up the worst fears, right? Listen, I'm not an expert on this. There's obviously a lot of government regulation around it. Not all states have adopted that regulation. So I think we're still a long way from what's going to happen here. So again, until you know what the government response will be, it's difficult to kind of take a reasonable call. I would just sit on the sidelines and wait. I don't need to do anything. I'm not in the hospital stock, so I'm fine with that. But what I would say here is that as with everything, the ratings of these stocks was very high, and it doesn't take a lot to kind of knock it down. With any kind of negative news. I'm sure it won't play out as the Armageddon story, but it's obviously when you have very highly valued companies, there's not much margin for any kind of negative, which could hurt the earnings.
All right, Andrew, it's a Friday. Let's talk about more fun things then, and a space that I think you were quite bullish on, the travel leisure space. That's come back, and that's come back in style. I spoke to Thomas Cook, which has obviously has various verticals that are related to travel, and never heard them sound so bullish. What's your view out there? The problem is some of these stocks have already seen a big run. But now, as we know, travel may not be seasonal, it may not be optional. It's almost become a compulsion. How much of it is in the price, though?
So, Nigel, when are you traveling next?
Tomorrow, but not too far, domestically, which is something that I would normally not do. I traveled last weekend, I traveled even the previous weekend. And the middle of the year would be the international travel, but that's not something that, I normally had on my radar as well. But me aside, you're seeing that unwind, the need for leisure, the need to travel. So your view on the stocks?
No, I'm very bullish on this whole sector, and will continue to be. There's not that many new hotels in the major cities to coming on stream. So operational gearing revenues will be huge for the hotel sector. I also think as well that we haven't seen the international travelers into India kind of reach the kind of pre-COVID levels, and that's still to come. So expect this sector to witness very, very high growth. And every time I listen to Puneet Chatwell from Indian Hotels on any of your channels is hugely bullish about what's going to happen going forward, not just on the kind of hotel revenues, but everything around experiences. Again, if you go and speak to any of the kind of beverage companies, again, it's all about experiences, premiumization. So there's a big change, and Nigel, you're part of that change. You're doing it yourself.
I mean, there's no surprises, right? That you've seen the Indian hotel stock double in the last 1 year. So, I mean, a year ago, it was just about 300 rupees, almost touching 600 right now. So we have people like Nigel traveling every weekend.
Andrew, I'm in good company. I normally come off after the weekend and say, it's so good, Arsenal won, or there was a good game. And then Sonia says, where I went off? I was at Bangalore, I was at Pune, I was at this and that place. So it's a positive rub-off for me as well. And, I'm trying to cope up.
I think everyone needs to just get out, right? After COVID, it's like this pent-up demand. I mean, it's been 3 years since COVID anyway, but we're still talking about pent-up demand. But anyway, Andrew, have a great weekend. Thanks a lot for joining in. Appreciate your time here on CNBC-TV18. Okay, let's talk about the real estate sector now. According to Jefferies' Real Estate January report, the primary market continued to do very well with inventory levels at a 12-year low. Even the Mumbai residential market actually has seen a big pickup. But let's talk about what's happening in Bangalore now. Irfan Razak, the Chairman and Managing Director at Prestige Group, joins us now to talk about that. Mr. Razak, good morning. And as always, it's great seeing you. Just wanted to understand at what part of the cycle are we on currently? Has the real estate upcycle reached a kind of mature stage, or do you think that there is a lot more to go on the upside?
Good morning, Sonia. I think there's a lot more to go, and there's still a lot of demand that is there. There's a lot of interest, and I believe this is a lot of more options and opportunities are available across the country, and we should gear up for it, because the housing demand in every segment is definitely quite bullish.
I wanted to ask you a little bit about the Mumbai market before we go back to talking about Bangalore, because you are entering, you're getting a bit aggressive here. But can you just help us with what the next 12 to 24 months will look like? Will you just be busy executing the current projects, or do you have a pipeline of new projects in Mumbai as well that you're staring at?
No, while we have a very strong focus, while we have a very strong focus on execution, we do have a pipeline. I mean, it's definitely imminent for us to have a pipeline. We just launched a project this quarter, that is the Prestige Ocean Tower, which has done exceedingly well. We've sold almost half the inventory in the tower that we opened. And while the existing projects are also continuously selling, and our inventory levels have pretty reasonably on a reasonable note, and we are getting more launches that are going to come in the next quarter and the next. We've got the Prestige Forest Hills in Prestige City, which is a large one in Mulund. And then there is also the Prestige Nautilus, which is again in the approval process. I think even that should get done in the next quarter, if hopefully as soon as possible. So this is the pipeline. And then we are looking at areas like Thane and Andheri. We are in discussions with various landowners for that.
Mr. Razak, hi. Good morning. Prashant here. I think there are two projects, right? One is very close to where we are right now, where we're sitting right now. Two in South Mumbai, right? I mean, at least the two that have come across.
Yes. Now, Prashant, the one that is where you're sitting is Mahalakshmi. And that tower, which is the rehab tower for the existing office towers, which is the Evergreen and Turf Estate. Now, these occupants will move in there latest by the third quarter of this calendar year. And that will probably be the first project that we'll finish along with the Jasdan Classic as well as the Siesta Tower in Prestige City. So in 2024, we'll have 3 completions in Mumbai. And I think kudos to the team that they've done a wonderful job to see that we are able to complete these projects in record time.
What could be the value of sales in FY25 from Mumbai?
Yes, that's a fantastic question. We have targeted 5,000 crores for Mumbai in the next year and maybe more. But very realistically and very conservatively, we have fixed 5,000. But I believe that Mumbai has a potential to go up to 10,000 crores in the year.
Wow, 10,000 crores in FY25 is put.
No. 10,000, 5,025. Potential to 10,000 crores in Mumbai alone, because Bangalore is doing 11,000 crores currently, and it's targeted to 15. So if Bangalore can do that, Mumbai is a much, much larger city, much more potential. It's only that we need to have the proper inventory and the proper pipeline.
Good morning, Mr. Razak. And prestige everywhere. I live in Bandra. You have a project over there. Prashant's talking about the one next to our office as well. So it seems you're clearly gaining traction here in the Mumbai market as well. So more option for all our Mumbai cars. But since you're saying that Mumbai will contribute close to around 5,000 crores in the coming year, that's FY25. For this year, I think you went at close to 20,000, or you surpassed that. For next year, what should the total sales number look like?
See, now this year, the 3 quarters, we did 16,000 plus crores. The team is really working hard, working overtime to see that we reach our 20K target, which we had set for them. I think they will surpass that, inshallah, hopefully. And the growth, we'll always look at a 15 to 20% growth over the previous year. That is what I could be conservatively committing, but then we'll come up with surprises because we have a strong pipeline in all the cities.
Okay, I wanted to just check with you on the Marine Lines project. When are you expected to, what is the timeline that you're looking at over there? And for a lot of your Mumbai projects, including this one, when can we expect the occupancy certificate?
Marine Lines is just started. We just launched it. That's, I said, that's the Ocean Tower, and that has sold almost over 50%. And we are happy with that. And the Nautilus, which is the Worli project, is under approval. And that should get launched in the next year. Occupancy certificates will come for 3 projects this year at the end of this current calendar year. And so we'll be pretty happy and quite satisfied that we went into the Mumbai market and finally actually completed 3 projects in good time.
So you started by saying that there's a lot more to go for the real estate upcycle and demand is very strong. So is there scope for more price hikes as well?
I wouldn't see price hikes have gone up. It's a function of the land and the construction cost and the overheads and all that. And I wouldn't want the price to go up too much, which will make things unaffordable. We have to strive hard to be efficient, because moment the price goes up, inefficiency steps in, and then nobody benefits, neither the customer nor the company. So the message to the entire company is that try and see how best you can keep your efficiencies and see how you can offer the product at a reasonable price. At the same time, do a decent margin for the company and give value to the customer. That's been our endeavor all the time, every time. Because we definitely want the customer also who's investing in real estate, which they're holding for long term, to see some gain. I mean, there's no sense in they're buying at a price and then don't see a gain for a year or two. Then there's no fun in that. And that's the way we have worked. And I think all our customers have benefited towards that mindset.
Mr. Razak, to that point, I mean, for example, I'll tell you the eastern sort of part of the city, right, on the south Mumbai side, where the Atal Setu, etc., has come in. There are other infrastructure projects coming. There's a connected to Worli, and there are 4 or 5. There's the Orange Tunnel. So lots of infrastructure development going on in that part of the city. I'm not sure if you are looking at evaluating projects there, but prices for new projects which will be ready 3-4 years out, have reached 50,000 rupees a square feet. So it's and maybe there is room to go. I don't know. But to Sonia's point, do you think, in terms, I mean, demand is vibrant, exuberant, etc. But do you think price-wise we are at the higher end, maybe not at the top? Always impossible to say that, but we are closer somewhere there.
Yeah, we are never at the top on pricing because inflation catches up. That's why the price keeps going up all the time. Say, if you bought something today, at the end of the project, 4 years later, 5 years later, when it's completed, there's always a 50% growth. That I've seen that in experience. But the thing is, but when we offer the project to the customers, we have to make sure that there is a bottom line benefit to the company, whereas the customer also gets the benefit. That's a struggle that goes on, and we like to keep our prices as tight as possible. Of course, in South Bombay, like you said, now that I have to cater to the upper end of the spectrum of the populace, but the volumes do come from the mid-level and the bottom level, and that's where we are looking at areas like Thane, Mulund, Andheri, where the overall purchase value of the unit value is reasonable, and people can afford to even take a borrowing and buy a home, because there's a different spectrum of people that keep buying, and we want to cater to the entire spectrum. It's not that we only want to cater to one spectrum of the population. And I always believe that the volumes come where people have that need for the house. Where, yes, there is a need even the upper crust. So while we are catering to all, I think the focus will be to where the volumes come from.
All right, Mr. Razak, so we have covered Bangalore, Mumbai. Let's focus on the NCR region. I think you had a project that got delayed a little bit. Tell us about, the focus on that area, Delhi, the surrounding adjacent places as well. What kind of contribution? Tell us about this launch as well.
Yes, we are pretty excited about NCR. We just now, as we speak, I'm closing out a transaction in actually center Mumbai, that's in KG Nagar, which is a high-end property. While we do that, the good news is Sector 150, the sports city in Noida, had got stuck for some reasons. And now even that, there's a green signal for the approval, and we should get the approval in maximum a month's time. So even that project, because we've got the show homes and the CEC all ready, so even that should come up for launch in the next quarter. And then we've tied up a large tract of land near Indirapuram, you can call it Noida, one side. So that's just off the highway. It's a large tract, 63 acres. Even that we are closing out in the first week of March. So there's a lot happening there. And I believe we are pretty bullish about the NCR. There is scope. There are already players in the market there, but there is scope for many more to come in. And I believe that we will meet with a great response.
All right, Mr. Razak, we'll leave it there, sir. Thank you very much for joining us. Hope to keep chatting with you to get regular updates on the progress. Very, very bullish sounding, Mr. Razak at Prestige Estates. Well, you got the market, which is up, 160 points now. So this is turning out to be a fantastic Friday morning. And we've got, 6:1 in terms of advances to declines ratio. And by the way, it's not as if there's been a dip or anything, that it's just started higher and then has trended up. That's been the story so far. So that's the broader market. Just a few other names, maybe can spot a few stocks which were not in the mix earlier. Oil India is one such name. It's up 6%. It's a sharp move up on huge volumes, 580 on Oil India. There is CMS Info. Of course, Vivek highlighted that name in the morning on top 10, 6% on that one, 409. There is, Pesalo, which is up 5%, 192. Moil Manganese Ore, 4.5% on that one. Stocks at 278. Inox India is another one, 1252. That is, looking very good with large volumes as well. Landmark Cars was not in the mix in the morning, but Landmark is up about 7%. So these are newer names and old forgotten name, not forgotten anymore, but BGR Energy. It's got volume, 7.5%. Stocks at about 53 at this point in time. So that is the broader market picture with lots of newer stocks added to what's moving up. We'll take a break here. We are back. We get you excerpts from our conversation with one of the biggest voices in the telecom space, Sunil Mittal of Bharti, in conversation with my colleague, Shireen Bhan. Stay with us.
Welcome back. This is Corporate Radar. Well, as promised, let's get you a big voice from the telecom space. Bharti Airtel Sunil Mittal spoke to Shireen Bhan and said he's eyeing the average revenue per user to hit 300 rupees by the end of FY25, but he ruled out any hike in 5G tariffs for customers just yet. Listen into excerpts from that conversation.
What's the aspiration as far as OneWeb is concerned? You're speaking to us from the office, which you say is buzzing at this point in time. But, where do you see OneWeb over the next few years? And specifically from an Indian context perspective, the FDI policy liberalized as far as space exploration is concerned, etc. How do you see this playing out as an opportunity for you?
Well, SATCOM is really an exciting area. Finally, after long years, satellite services are now providing the desired speeds that are required for running, your normal day-to-day operations on internet, like terrestrial mobile networks or fiber networks. Speeds are good, capacities are high, and this has all been possible due to advent of technology, especially in a low Earth orbit constellations. We are very, very keen to start services in India. We are ready. Our ground station is firing up in Gujarat, Mehsana. And the southern SNP is towards completion now. So every square inch of India is covered now. Satellites are all up there in space. So we just now need the green light to start our services. I personally believe it will benefit a lot of areas that need connectivity, especially for defense forces in the Himalayas, in the deep deserts, for Navy in the high seas, and of course also for our Air Force, activities. Then ONGC for the oil rigs and many other industrial applications. And even for my own industry, all the USO that we get from the government, where we put up geo-based VSATs, which are slow and not as good as what we can offer, they need to be replaced with the LEO network. So I am actually pretty excited about this opportunity. In Africa, we are starting now. Australia has started. In the CIS, including Ukraine, services are now up and running. In Canada and Alaska, we are up and running. So it seems to be the right place to be. But again, this is a new area. There are risks in the business. There are very strong competitors like Starlink out there, with Kuiper, Amazon coming up in the next 3-4 years. So exciting place. I'm learning every day and trying to understand this space better.
Let's talk about the old areas, the legacy business, the bread and butter business on the telecom side. For several years, we spoke about that 200 rupee ARPU. You've got to that, and now, of course, looking at perhaps 300. What's the outlook as far as, telecom is concerned? You've been on the premiumization side of things for a while now. Is a tariff hike possible, likely, on the cards? Take me through what the dynamic looks like at this point in time.
Gopal uses the word tariff repair, and I think that's the right word to say, because hike always looks pretty aggressive. Fact is, when I was in Barcelona just 2 days back for the Mobile World Congress, people are stunned at what level of ARPUs the Indian industry operates. $2.2 a month for almost unlimited bandwidth that is sold. 2 GB a day is can't even be comprehended by the Western operators, who operate at $30-40 a month with probably half a GB a day. So Indian industry, if it has to be viable, and these digital highways that have been built, especially by the two main operators, really need to be financially sustainable. For that, I have mentioned 300 rupees ARPU, which will still be just $3.50, will just ensure that there's enough money on the table to put up new networks, more fiber, more submarine cables, more satellite investments. And 300 rupees, as you know, was mentioned many years back. And a lot of inflation has taken place in the last 5-7 years, where electricity prices are up, employee costs are up. Almost every touch point is up in terms of cost. Yet we are still talking about 300. In fact, that number should look more like 400. But I recognize that, it's very difficult in our industry to take the ARPUs up. So next pit stop is 250, then hopefully 300. And if you ask me, I hope it happens within the coming financial year.
So 300 within the coming financial year, or 250 within the coming financial year?
I hope they should be 250 and then 300 by the time we close the next financial year.
Mr. Mittal, on the 5G front, because you talked about that, what about the monetization? Are we likely to see industry? I mean, if you're, as you said, it's a challenge to even get to 250 and 300. What about the monetization, different pricing as far as 5G services is concerned? I mean, should we expect that even?
I think people are not going to pay you anything extra for 5G unless you're going to do industrial applications where you go into industries and factories. And I was in Barcelona. It's mind-boggling what's going on there. You can see early signs of AI, 5G combined networks running for the industries, especially industrial units. And that is where some monetization will happen. But as far as B2C is concerned, consumer part of the mobile industry, there is going to be nothing for the tens and tens of thousands of crores that have been spent on spectrum as well as the network. And that's why the need to have 300 rupees has become even more acute.
So nothing extra on the 5G front in terms of pricing. Mr. Mittal, I also want to understand from you, what we have seen, of course, is a big deal yesterday with Disney and Viacom and Reliance coming together. And the move towards perhaps more and more bundled services. How do you look at this dynamic and what do you believe the impact is likely to be? How do you see yourself positioned in this environment?
Well, we have always said we will partner with content providers. We have never been in content, and therefore we will reach out to the new combination of Viacom, Disney. They will be one of our providers on a non-discriminatory basis. We have relationship with Netflix, with Amazon Prime, with Z, with Sony, and this will be one of the providers. And I think this consolidation is good for the industry, and I only hope that everything will be provided to all the networks on a non-discriminatory basis. So we welcome this move and look forward to a healthy relationship with the providers.
Mr. Mittal, I know we're running out of time. My last question, what's the next big milestone for you? You said you're spending a lot of your time traveling, learning about new sectors and new areas. What's the next milestone that you've set for yourself personally?
Well, I'm not too far from 70. I'm 66 now. So another 3.5 years, I should, pump in as much of knowledge and, building of global relationships that I can for the benefit of the company. But I still have good energy, and I hope I'm able to contribute towards the strengthening of Airtel's ecosystem around the globe.
Well, interesting chat there with Mr. Mittal himself. For the time being, we slip into a short break. But on the other side, we'll talk more about markets. Let's... all right, I think we can go to the conversation right now itself. We have Mr. Conrad Saldana, the MD and Portfolio Manager at New Berkshire Berman, who joins us on the show. Hi, Mr. Saldana. Good morning and good to see you, Win. If I'm correct, I think you managed close to around $5 billion odd, and I think 20-25% of that is towards India. Are we getting those numbers correct?
That's correct.
All right. And I'm just looking at the bottoms-up approach that you've had. And this week itself, you participated in a couple of fundraising plans, as well as you participated in a large block. One of those names is CMS Info, which, by the name of it, it looks like it's a cash management company. Though they have been diversifying, and a lot of their money now doesn't come from core cash management. Give us your view on that one. That's the one that's up close to 6%. So I thought, first up, let's ask you about the latest large trade.
Sure. So in terms of CMS or cash management, it was previously known as, I think people exaggerate the demise of the cash business, which was their legacy business. That's still holding up pretty nicely. But as they look to diversify and become more even into collections in new areas, and I think what we're backing again is a very solid management team that's executed well. This was obviously the last cleanup trade that came from the PE investor, so that created that opportunity on a business in our mind that's going to grow at 20%, and you can buy it in the upper teens in terms of price to earnings multiples. So it looked very attractively priced for a business for us that's going to grow, expand its TAM over a period of time, and is backed by a very strong management team.
Mr. Saldana, hi, good morning. I mean, actually, before we hit air with you, we were just discussing that here. And it's interesting to note because, I mean, the impression generally is that cash management is in fast decline. And that's the impression I had as well. And I was wondering, what's happening now. But yeah, good to hear that. So you know, when I look at the holdings that you have, you got not all, but you got the large banks, and you seem to be very bullish on the on manufacturing as a theme, right? Import substitution seems to be a common thread running across a lot of the holdings there. Let's just talk about banks first. I mean, because that's been the one area which has over the last 2 years or so taken a bit of a backseat, especially some of the larger names. What is your own assessment of what's the roadmap from here? Names like HDFC Bank in particular, a lot of interest, a lot of debate whether it'll get back to winning ways or not, and whether the best is behind. How do you think about that question?
Sure. I think the banks have been left out, right? Especially the private sector banks in the last rally that we've seen in India, rightly so. Given that obviously there's liquidity tightness here, the Reserve Bank of India is holding the line. Obviously, when you see a tremendous GDP print in real terms, you have to do a double take of 8.4%. You know, there's a little bit of hesitancy on the Reserve Bank of India in terms of easing, given also the external factors. Now, the biggest issue for the banking sector is going to be growth, right? And they have been concerned, or at least the Reserve Bank has been concerned, on smaller ticket loans, how much of that is flowing into the market, how much of that is actually going to consumption. Reality is consumption actually hasn't been that strong, right? Especially in rural. So there's a bit of hesitancy, and that's put this overarching kind of dampener on the banking sector. To your point, and you referred to HDFC, and I think that's the was the cream in the sector, still has a great franchise, and you've got these two big entities coming together and merging. That's going to be a 3-year execution plan. So I think people are just way too myopic. My sense is that management probably, in terms of communication, could have probably done a better job of just emphasizing the long-term nature of building out the franchise, and in the near term, people are going to watch them in terms of deposit mobilization and how they do on the loan growth side and not lose market share. So there are a few monitorables. I think people got too obsessed with the last quarter. And I do think that if India has to grow, and has to grow at, even if it's not the 8.5% and it's sustainably above 6%, the banking sector has a key role. It is getting more competitive, but I do think that it's left behind this rally. It might take a quarter or two, but I do think that some of these private sector banks are extremely well run, and they will benefit from the economic growth.
Okay. Conrad, hi, good morning, and thanks for joining in. The other stock that you have in your holdings is Tube Investments, and we were just talking to CG Power, right? The cabinet has approved their establishment of 3 semiconductor units. Of course, it's a long gestation period project, so it'll take 3 years for the plant to come on stream, etc. But what is the kind of opportunity that you see here for companies like CG Power, even, I mean, for the group as such, since you have Tube Investments in your portfolio?
Sure, and you're right that CG Power is a big driver of the Tube investment case, right? Apart from financial services, this is a massive runway, and we're super bullish on manufacturing, localization in India, and just self-sufficiency, right? We've seen how well Taiwan has done. Subsequent to that, you saw China ramp up very successfully, and having visited and invested in companies in that area of the world, I genuinely believe it's a long runway, but keep in mind that it's also a long journey, right? So you're going to have missteps along the way. I think CG Power with Renesas, how they've teamed up with, I think that makes a lot of sense. Getting the IP, getting the skill set, getting the precision down in manufacturing, that's going to be super important, whether we tie up with the Japanese in India or with the Taiwanese companies. I think that's going to be the way forward. I would say, Keynes is another name we've owned. I think they're executing well. So there's going to be a few winners in this. And more recently, we had a transaction with Xpro. You can get into the components of this too for electronics, dielectric films. Capacity is going to grow threefold for these companies. So I do think it's a good runway, but getting the winners is going to be a little tricky because it's not going to be one straight line. This is definitely a long gestation progress from moving from PCBA right now, which is PCB assembly, moving up the value chain into actually PCB assembly, notebooks, PC, then into servers. So it's a very long runway. And I think the government's done a phenomenal job of opening up the sector, localization, doing the PLI schemes and getting this ecosystem going. you definitely need that. Now it's into the private sector's hand to really take it and run with it.
All right, Mr. Saldana, good to hear your thoughts. You're sounding very, very optimistic about the manufacturing space as well. And we here as market commentators, we often talk about the amount of money that's being raised from the equity markets. I'm looking at your participation. You've been participating across some of these mid and small cap companies as well. Wishing you all the best and looking forward to chatting up with you in the time to come. By the way, on the bottom of your screen, you have Mahindra & Mahindra's numbers that are flashing for you. And I think, Sonia, in comparison to the poll that we had, it's a little bit better. The total sales, 4,000 units better.
Oh, absolutely. And, you know, the auto numbers were expected to be strong. There's no problem with the auto business at all. In fact, very strong PV sales led largely by the SUV segment. It is the tractor numbers that have been under pressure, both for M&M as well as for Escorts, and that is a problem pocket. So I'm just waiting to get some details on the tractor numbers, but the auto numbers are much above what the street was estimating, and that's pretty much been driving the stock as well higher over the last couple of weeks and months. So good move coming in on M&M. In fact, in the last couple of days as well, the M&M stock has been up and about, anticipating these positive auto sales numbers. But Mitesh Thakkar is back with us. Mitesh, you want to give us a quick comment on the M&M stock itself? At this price of 1950, is the risk reward still favorable for traders?
See, I think the last breakout came at peak levels of around 1660. Too late to enter, but yeah, somebody's having it. Revise the stop loss about 1900 and hold on to positions. I think the stock is not giving any signals of this uptrend coming to an end, but I'm not sure from a risk reward point this is a good entry point. So I think that's the only worry which I have. On the stocks that I like, I think Tata Steel is something which is giving a good breakout today. So that's a buy. Keep a stop at about levels of 140 to 141.5 here. Look for targets of 155. And ONGC is the other one which I like as well. That's a buy with a stop at about 264 and a target of 285 can be looked at.
Okay, by the way, the tractor numbers are also out and they're not looking good, down 16%. The management says that they continue to face agri stress due to erratic and deficient monsoon. However, the Rabi crop outlook is very good, with wheat crop likely to be a bumper crop this time around. So weakness coming into tractors, but auto sales very strong. Let's take a quick break. When we come back, we'll be joined by Suven Pharma's Executive Chairman Annaswamy Vaidhesh and the MD V. Prasad Raju to discuss their merger with Cohance Life Sciences. Stay tuned. Welcome back. Well, as promised, we have the management of Suven Pharma. The company yesterday announced a proposed scheme of amalgamation for the merger of Cohance Life Sciences Limited with Suven. Now, Cohance shareholders will get 11 shares of Suven for every 295 held in Cohance. Suven Pharma's Executive Chairman Annaswamy Vaidhesh and MD V. Prasad Raju join us now. Mr. Vaidhesh, can you take us through the details of this merger between Suven and Cohance?
Primarily, this merger is between Cohance and Suven, and with this merger, Cohance shareholders to get 11 equity shares of Suven for every 295 shares held in Cohance, and it's a very good deal for the retail shareholders, as it's likely to be double-digit EPS accretive in the year one itself, post-merger. So this is without synergy benefits. So we believe that as Suven, we move closer to our goal of creating a diversified end-to-end CDMO leader from India. And in fact, we'll more than double our revenue base with a combination of the two platforms. And we'll have 3 distinct business units with a combined, where we'll have a pharma CDMO, spec chem CDMO, and API plus. So which will give us a very consistent, stable growth profile in multiple engines of growth. And quite obviously, I'm very happy that Suven shareholders likely to be double-digit EPS accretive in a year, first year of the post-merger.
Mr. Raju, would you like to add more details of the merger between Suven and Cohance?
The merged platform entity will have significant scale benefits in many ways. The merged platform will have access to fastest growing chemistry capabilities like antibody drug conjugates, warheads that we manufacture. That is one important benefit Suven will have an access, and also best-in-class GMP facilities from Cohance side. Not only that, the entire combined entity will have best-in-class financial metrics, around 35% of EBITDA margins, 30+% of ROCE, and steady cash flow generation as well. We are likely to realize 10% of incremental EBITDA from revenue and the cost synergies over next 2 to 4 years. It's a very good deal for Suven shareholders, as it's likely to be a double-digit EPS accretive in year one of post-merger.
Mr. Raju, you mentioned 35% consolidated margins. Earlier, Suven, barring Q3, margins had fallen to 29%, has always enjoyed margins of over 40% historically. So is it Cohance that has lower margins, or is it due to a lack of recovery in Suven's margins? If you can explain that to us.
So let me just clarify. Always Suven has been maintaining 40+% of EBITDA margins. In case of Cohance, they have close to 32+% of EBITDA margin. We expect at a combined entity level, we will be in the same range of 35+% EBITDA margin.
Okay, 35% plus EBITDA margins. Got it. Mr. Raju, what are the opportunities being looked at from the CDMO space as a consolidated entity?
The primary thing is we have enough capacities between both the organizations. The key objective is to get major share of wallet from the existing customers. And it always creates a value proposition for us, because the capacities are available to us to have at least 1.5 to 2x of a growth. That's a primary view that we have.
And Mr. Vaidhesh, what kind of opportunities do you see in the CDMO space?
And of course, ADC will play a very big role, which is one of our star performer in Cohance. So that will add a very big growth engine for our combined entity.
So the previous quarter, Mr. Raju, saw pressure in both the specialty chemicals and the pharma CDMO business for Suven. Has that pressure eased by any chance this quarter?
Some of the destocking macros related challenges on AgChem has created a bit of a stress on the overall performance. And as you understand, this business itself is cyclical in nature, and we expect the recovery to come in the next 4 to 6 quarters. And the near term will not have any adverse impact, near term to long term. In pharma also, there was a bit of a COVID-related destocking has slightly impacted. However, overall pharma CDMO is continues to grow. And we also expect the AgChem business also come back to the growth path in near term.
All right, let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Rob Subaraman, the global macro research head at Nomura, to discuss the stellar third quarter GDP numbers and the macro outlook.
Welcome to It's the Economy. It's a big day for the Indian economy, actually. India's GDP growth for the third quarter came in at an eye-popping 8.4%, with the first quarter and second quarter also getting upgraded above the 8% mark. Puzzlingly, however, a lot of the growth has come from net taxes, which means either higher indirect taxes or lower subsidies or both. The other worry within the GDP composition is that consumption is still weak, growing by only 3% in the latest quarter, while investment is doing the heavy lifting, growing by 10.6%. This disjoint has now continued for about 3 years. At the other end of the world, The US PCE inflation was red hot, rising at 0.4% month on month, but fortunately, that was as expected. Another important economy, China's PMI that came today, February PMI, shows that manufacturing is still contracting, but overall PMI is growing modestly. The number has come in at 51. So how will 2024 pan out for India, Asia, and what should markets take away from these macro data? I have with me one of the best in the business, Rob Subbaraman, the global chief economist for Nomura. Rob, good morning and thank you very much for joining us. It's been after a very long gap, actually. Okay, but first up, this celebratory economy numbers, Indian economy numbers, what do you make of them?
I think overall, the numbers are good. So I know there's been a lot of discussion about indirect taxes and value-added GDP growth. I think it was 6.5%, so a bit weaker than the headline number. But even 6.5% would have India, out of all the major economies around the world, by far the fastest growing. So, and you know, when you look at the composition, I heard you just talk about how the biggest driver of the GDP is investment. That's very much what emerging economy needs. If you get strong investment, because India really needs to develop its infrastructure, hard and soft. And I think if you can have successive years of strong investment that creates capacity and allows you to keep inflation low and raise your potential growth. And I think India could be on the cusp of an investment boom. And if that really does happen, India can sustain maybe more like 7 to 8% GDP growth in the coming years with low inflation. And I think that would be an extraordinary achievement and very good for the prospects of India economy and markets.
Okay, so, you know, that's very good to hear. Would you say that, therefore, we are on the cusp of an 8% growth because it's 7.6% forecast for the current year and last year 7%. So it's at least 3 years of consistent 7% plus growth.
I don't think it's set in stone yet that India is on a sustainable path. I think we need to see, I think, more evidence, in particular, I would say, of private investment picking up. I think the investment we've seen so far has been mainly led by the government, which is good. But hopefully, as interest rates come down this year, as we see stronger foreign direct investment into India, and with fairly healthy corporate balance sheets, we will start to see private investment after the election picking up strongly. I think that's the important ingredient needed to join the public investment. And if that happens for a couple of years, I will get more confident that India's potential growth is going to be an upward trend.
Okay, no, that's good to hear. I just wanted to point out one fly in the ointment. This consumption lagging investment by a huge margin. I mean, 3% versus 10% or 3% versus 11%. This is for the 5th consecutive quarter. You think if consumption continues to underperform so much, CapEx guys will hesitate. The expected long-awaited private CapEx cycle could get postponed if consumption is so low for so long?
It could, but I don't think it will. My base case will be that consumption has been weak in part because of the cost of living crisis and the high inflation that India has had in the past. And now that's starting to ease. I think also if you do get this strong CapEx cycle, it is going to create growing demand for labor as well. And and that will also help boost consumption. So going forward, I think with inflation coming off, cost of living pressures easing somewhat, and if we continue to get strong investment, I think you will see that gap between the very strong, particularly public capex and private consumption narrowing.
Okay. Well, actually, since you're speaking about cost of living, let me get that first before I come to the US PCE numbers. China is much feared as having a very disinflationary impact all across Asia. Their investment in manufacturing is becoming the talk of all economists. Now, do you think this can actually make it a quandary? Because core inflation can fall in our countries, but food inflation is not falling. So that leaves the central bank in a dilemma. How do you see core inflation falling, and how do you see central bankers reacting?
Yeah, it is a bit of a dilemma. I mean, there's it's not just in India. I think in many countries, there's parts of inflation that are coming off more sharply than others. I would say, for instance, in Europe right now, goods inflation is coming off a lot, but services inflation is not. I would say, broadly speaking, I think central banks are generally looking at the overall underlying inflation. They're not putting over attention on a particular element. I know in India, food makes up a very large share of the consumption basket, and so is very important. I think the efforts to try to manage food prices more through fiscal policy and trade policy, I think is helping to an extent. But to be honest, food is very difficult. It's sometimes it can be less in the control of policymakers and more driven by climate change and the weather. So it's hard to really control that part of it. I would say that the bigger picture, though, is one of inflation clearly coming down in India, and particularly underlying inflation, which takes out some of these volatile items, coming down quite significantly. And I think that's a very good thing. And as I said earlier, if we do get continued strong investment that creates more capacity for the economy, India could be an environment where it has strong growth and low inflation, and that is a very Goldilocks environment.
Okay, we are going to put that bite of yours again and again. Sounds really optimistic. We are in a Goldilocks scenario. Now to the US inflation number. What's the sense you're getting with, month-on-month number coming still at 0.4%? Where's the Fed headed? And will we still manage a decent soft landing in the US?
So the inflation data that we've had for January has across the board been strong, right? It started with the CPI and then the PPI, and now the Fed's most preferred measure, the PCE, and particularly the Core PCE at 0.4%. And if you annualize that, it's well above the Fed's target of 2%. And even more so, the so-called super core measure, which is core services taking out shelter prices, that was up even more strongly at 0.5, 0.6. So right now, this is not the time for, I think, FOMC members to say that they are ready to cut rates. I think also with the economy doing pretty well, right, at the moment, and the labor market tight, I think the message and what the Fed wants to do is really just be patient and get more data. And they don't see any real rush to cut rates because the economy is doing well, and inflation is turning out to be a bit bumpy. So they'll take their time. We think the first Fed rate cut will happen in June, and we're expecting 3 cuts this year, June, September, and December. So 75 basis points in total.
Okay, a final wrap-up question, Rob. Repeatedly, economists in India and even abroad keep saying that one of the clouds for the headwinds for the Indian economy would be the expected global slowdown. But that expected slowdown is not coming. The US economy as much has been surprising on the upside quarter after quarter. 3.2% for their fourth quarter, 4.4% for their second quarter. So do you think we are going to have a very good 2024 after all? We may be living in fear, but it won't be that much of a global headwind.
I hope so, but I would say it's a bit mixed. The two economies that are performing among the best out of the major ones are India and the US. Europe growth is weaker. Japan is in a mild recession right now. China is in a deflationary slump. So I wouldn't say the world overall is growing strongly. There's parts that are clearly resilient. But I would say also looking at the very leading data, such as the PMIs, there's some signs that maybe Europe is starting to pick up a little bit. So that is a bit encouraging. The very positive story I think that could potentially play out, we'll have to see, is the last couple of years has been a big supply problem for the world economy because of COVID, because of the Russia-Ukraine war, a lot of supply disruptions. That looks like it's eased off. And the very positive story would be, are we going the other way? Are we going to be entering a supply boom where AI and other factors boost productivity and we have very strong immigration? That could be a very positive environment for strong growth and low inflation. We'll have to see, but there is, more and more talk about that possibly playing out in the US.
Okay. Rob, thank you very much for that optimistic spin that you are giving us about the global economy, about the possibility, and certainly what you say about the Indian economy, creating capacity and possibly in a Goldilocks scenario where inflation is under control and growth is sticking fine. On the cusp of an 8%, but not yet cast in stone. We will take that with both hands. Thank you very much for joining us. The stock markets are in a celebratory mode, taking Rob Sivaraman very positively 1% higher at the highest point this morning for the Sensex and the Nifty. Wrap up on Bazaar. Chartbusters will take that exciting story forward.